Today we're going to be discussing why I think personally a lot of us traders fail and why the statistics are, as I gave in the other previous videos, 95 to 99% of traders lose over a period of time. Usually that time period is 90 days or 3 months. And today we're going to discuss why. So let's break it down logically. What is trading? Well, trading is you betting that price is going to go one direction versus the other. Now, breaking down even further, you can buy or you can sell. It's literally two options. Price could actually also range, and that's the third one where it looks like it's going up and then goes down and up. But to begin with, if you can only control what you can enter with, so you control the buy button or the sell button, you do not control price. And I think for me, after the first 4 or 5 years of trading, I understand that now, but to begin with, I think that's where a lot of traders fail. They fail to understand that price doesn't do what they want it to do. And it's frustrating or extremely hard because unlike other jobs where you put in effort, you are an accountant, for an example, and you do, let's say, a year end of accounts, you're putting in hours of work and you have an end result. Whereas with trading, you could sit at the charts for 8 hours, but you could have no result. And that change in mindset is what really is hard and still is hard for me personally, because I feel like I'm a hard worker. So therefore in my head, I'm thinking, right, if I put in X amount of time, I should get X amount of results. But that is the complete opposite in trading. And that's, in my opinion, why most people do fail, linked with the second point I'm going to make in a second, but making sure that you remove yourself from that thinking of a normal job, because most jobs, the more effort you put in, the more reward you get, give or take, right? In trading is not like that. The first couple of years, of course, you need to study, you need to understand the markets, you need to understand your psychology. That's the most paramount point. But once you're actually in the markets and pressing buy and sell, just because you click buy and stare at the chart for, let's say, 3 hours, does not mean your position will hit your take profit. Just the same way, if you click sell, it does not mean you'll hit take profit. So removing that mindset from yourself is extremely hard. And I don't think it can be done in a year. I don't think it can be done in 2 years, especially not by yourself. You need to have a mentor or someone who's been through it around you and that can guide you. It doesn't mean you have to go out on papers on. You can watch plenty of videos, but you need that first step of finding someone to guide you along that path. Secondly, you need to understand your own psychology. What are your emotional triggers? Do you even know? Do I know that? These types of questions are what you should be writing down and dissecting before you jump to the markets. Because if you don't know what's going to emotionally trigger you, how are you going to control or learn when to step away from the markets? I don't think you can fully control your emotions because we're all human. We naturally are wired to have emotions. If we're feeling happy, our brain releases that chemical that makes us feel happy. Same when you're sad. Same when you're stressed. So we can't control necessarily those chemical reactions, but what we can control is our actions after those chemical reactions. So to put that simply, when you feel yourself getting happy, potentially because a trade's about to hit your TP, maybe you need to put into place some sort of plan to step away from the charts or to manage more aggressively or to move your SL above a certain part of market structure, because in your head, you've already got those emotions running and there's chemicals flying that you no longer are thinking logically. And as soon as you're not thinking logically, that's when the market takes away what you earn. So let's say, for example, everyone loves examples. Your trade is running very nicely. You're up 4 to RR. So you're up 4%. Let's say you risk 1%. If you're up 4%, your target's 5%, you're feeling good. I don't care who you are, you're feeling good, right? You're already up 4%. This is the part where a lot of people fail, and myself included, where how do we make sure that we don't give away what we've earned because of our emotions? We've already listed a couple where you trail your SL more aggressively. You allow market structure to breathe, of course. Your TP's in a correct place for a reason. But make sure we don't move our TP for a illogical reason. For example, like we said, we're feeling good. We're like, this is going to run forever, to the moon, as all the crypto guys say. But that moon could be, and probably is, at your TP level because you've done your analysis previously. So you need to just trust your analysis that you did previously before you entered your trade, trust your levels, and let the trade play out. Now, while I do agree you should never let a trade like that go anywhere near your break even, let alone a loss. So moving your SL up, in my plan, makes sense. So understanding that, okay, we do have emotions in play here. We have to accept that we can't control and worry about the things we can control, which is us clicking that buy button and clicking that sell button. Because without those buttons, there is no trades. And without you actually clicking the buttons, there's no trades. I think those 2 points for me are why I failed to begin with, and also what I see a lot of things on social media or how they are portrayed, for example. So making sure you almost remove that mindset of it's about my time in the market, it's about how many hours I put in. I think it's a very hard habit to break because of the way society is, because of the way the world works and the way our jobs work. We are always taught in school as well, where you put in X amount of hours of revision, you will get that grade in your exam. You put X amount of hours in your job, you will get that promotion. Removing that from trading is so hard, and no one talks about it because maybe they don't actually understand it, or maybe there's no real good steps into how to remove that mindset and go into this trading mindset. And that's a whole new video in itself. Secondly, it's the emotions part. The emotions that you have will always be there. There'll be certain things that you can do that you can help guide your behavior around those emotions. And we've already touched on some of them that you can implement into trading. But for me personally, write down, even when your trading journal, when you're feeling a certain emotion, you're feeling excited, you're feeling scared. Are you risking too much? Are you entering at the wrong time? You're not following your plan. The negative emotions I find are always linked back to your plan. So when I'm feeling scared about position, I've probably over leveraged, or I'm not following my plan, or I've entered at the wrong time. For example, data is about to be released in 10 minutes. So those types of things are negative emotions because I've not done something that I should have done. Whereas the positive emotions are usually linked when I've done something right, but I need to remain resilient. You need to remain as stoic and let the trade play out logically. So if you are feeling those emotions rise when you're in a winning position, or even in a position and you're entered wrong and is losing, learn the ways in which you can, one, write them down and record them, but two, act on them. Recognize they're there, because recognition is the first point in understanding, right, I actually am feeling these things. Let's do a step-by-step plan to not feel these anymore. So those are the two main reasons I think why most Forex traders are destined to fail. Let me know what you guys think.